US Congress, the US House of Representatives on Monday has passed the Biosecure Act. And how will this impact the pharmaceutical companies in India? Of course, initial moves are suggesting this would be a positive because we get benefited from it. To what extent and what stops? Let's go across to Ekta.
Well, yes, important news because the US House of Representatives has passed the much-discussed Biosecure Act, which now heads to the Senate for a vote. Now, the act seeks to reduce American dependence on Chinese biotech companies over the next 8 years and has specifically mentioned 5 Chinese firms, including the likes of WuXi Biologics. Now, pharmaceutical companies doing business with Chinese biotech companies have already been exploring ways to diversify their supplier base. Indian companies such as Divi's Labs, Syngene, Laurus Labs, Piramal Pharma and Newlin have become focal points of possible beneficiaries. Mostly all the companies have already witnessed increased exploratory discussions but are still to see conversion to business. However, they do expect possible business over the longer term and expect it to start with smaller projects first. Now, Laurus Labs, for example, anticipates a gradual shift while Piramal Pharma has noted an uptick in discussions. Syngene and Divi's Labs seem to be at the forefront of the opportunities. Syngene has said they are participating in pilot projects related to quote-unquote the China switch and seen a 50% rise in requests for proposals in Q1. Divi's Labs say that they are seeing opportunities in phase 2 and phase 3 molecules and the possibility of being a second source in already commercialized drugs on the custom synthesis side. However, it would take 3 to 4 years for everything to go through. Lastly, challenges for Indian companies include lagging behind in technology, experience, trust and competition from non-Chinese and non-Indian companies. So while positive, one has to see the opportunities materialize on a more tangible basis. Well, to talk more about this and the entire pharmaceutical sector, we have Chirag Dagli, who is the fund manager of DSP Healthcare, joining in to discuss the entire space. Chirag, hi, welcome to the show. Well, you've joined us on a day where, all these CDMO stocks are on fire and possible beneficiaries of the US Biosecure Act. So give us a sense in terms of how beneficial do you think the US Biosecure Act would be for Indian CDMOs such as, say, the Divi's and the Syngenes and the Lauruses of the world?
So what has really happened is that, essentially all the big pharma companies are now going to look at least China plus one, having one vendor beyond China. China, as you are aware, is a very large part of the overall ecosystem in pharma. And what's going to happen, and nothing's happening immediately, like you said, nothing happens over the next 12 months. But as you go forward, 1 year, 2 years, 3 years down the line, you see a lot more companies doing, visits to India, trying to cultivate more vendors in India, trying to de-risk away from China. So as we look at the next 3 years, I think nothing happens in year 1. Year 2, you start to see some bit of, revenues come through, and year 3, things really start to pick up. When you think of the opportunity for Indian pharma, clearly Indian pharmaceutical companies have been very strong in custom synthesis capabilities historically. It's evident in the generic presence that we have, and it's now increasingly going to be visible in the custom synthesis business for patented molecules as well.
All right. So, Chirag, you said that obviously nothing happens in the next 12 months, but year 3 is where the opportunity actually starts to show some sort of fruition on ground itself. Would you have any estimate of the size of the opportunity basis, what the difference between, say, China's market size is right now versus what India's is, and over the next 3 years, say, the kind of capacities that have been announced already? What could a realistic size of the benefit be, according to you, for the entire industry? And then we drill it down to who benefits in terms of specific sectors.
So custom synthesis manufacturing globally is between 25 and 30 billion dollars. This is basically manufacturing of APIs for innovator pharma companies. So this is anywhere between 25 and 30 billion dollars. The largest player in India is about a 400 to 500 million dollars. So that's the magnitude of opportunity or the gap that we have. So it's a very, very large opportunity, clearly. But it's also a very fragmented industry. And over time, of course, this will get a lot more consolidated, but this process is going to be very gradual. So the opportunity today is almost as big as 25, $30 billion. And the largest out of India is $500 billion.
Okay. But Chirag, what are the challenges to scaling up and to compete with the Samsungs of the world, coming in from South Korea, as well as the companies which are vying for business from India, from Europe, as well as the US? Do you think that India has the capability, the trust, the technology, the R&D, and the people power to compete on a global scale to get a formidable chunk of the business?
Understood. Look, I think Samsungs of the world play in the biologics manufacturing. It's a little different than the chemical manufacturing, which India has been doing for a very, very long time. In the chemical manufacturing process, clearly India has substantial strengths and expect us to do extremely well in that chemical custom synthesis manufacturing piece. On biologics, I think still early days for Indian pharma companies, and lots to learn for us, and big steps being taken by many companies. But I think still early to say that in biotech, India can be substantially bigger than some of the global players. But in the chemical
exactly where
clearly where.
Correct. Chemical manufacturing, we know that we have that prowess, but that's exactly what I wanted to drill down on. Biological manufacturing, the biotech companies, and do you think we can compete with them? And is that an opportunity for India when it comes to outsourcing?
So on biologics, still early days, like I said, Ekta, still early days. A lot of work needs to happen. The manufacturing technology itself in biologics manufacturing is also going through a little bit of a upgrade. So 10, 15 years back, large bioreactors were the order of the day, and which is where the Koreans took a big leap. Now, increasingly, a lot of the biotech manufacturing is happening on the disposable reactors, where smaller sizes can also, smaller sized batches can also be equally competitive. So, little bit of, still early days, I would say, for Indians to compete in the biologics manufacturing, biotech manufacturing piece.
All right. So if we had to drill it down, who would be the immediate beneficiaries and who would be the biggest beneficiaries?
Tough to take names, but the list is out there. Most of the chemical manufacturing, most of the API, manufacturing for the innovator companies will stand to benefit because look, I think there's going to be a lot of work that's going to come. Whether some of them get it or not, these are all chances. But we're already seeing companies talk about 2 times jump in the inquiries and the kind of RFPs that they're seeing.
Okay, so Chirag, just before we let you go, when you are making this portfolio now, say you have 100 rupees to spend and allocate within the entire pharmaceutical space, how would you allocate that money? Would it now go towards CDMOs in India? Would it go towards your pure play generics? Would it go towards the Indian domestic manufacturers? How exactly would you spread it out?
So I'd say have all of them. Each of them have their own story to tell. Clearly today, CDMO players are flavor of the season. In some time, maybe Indian generics will be flavor of the season. A couple of years back, US generics were, or maybe 12 months back, US generics were flavor of the season. Portfolio should never be skewed towards one particular, aspect. But we see opportunity in each of the sub-segments within.
But which one do you see the biggest opportunity?
All of them is a great answer, but resources aren't unlimited. So say, for instance, one had 100, how would you allocate it among all the sectors that Ekta just spoke about in terms of percentages?
So I'd say probably about 10-15% in CDMO, which is today the flavor of the season. About 25% in India pharma formulation manufacturing, about 25% in export manufacturing, export formulations manufacturing, and then about 5-10% in generic APIs, and then diagnostics and hospitals.
Okay, all right. And has that risen, that 10 to 15% allocation to CDMOs, has it risen after the Biosecure Act, or was it always 10 to 15%?
From 5 to 10 to, let's say, 10 to 15 is how you should,
Okay.
broadly think about it.
Okay, so that's where you see the incremental opportunity. All right, Chirag, it's been a pleasure talking to you, and quite an opportune day to join in and talk to us as well on the pharmaceutical space. Thanks very much for joining in and speaking with us. So that's the word coming in from Chirag Dagli. Looks at the pharmaceutical space very closely. As of now, for the markets, there's a bit of